Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
BTST time, Ashwani and Prakash, of course, with us for some of those trades. Ashwani, I'll start with you. Your thoughts on how things are shaping out right now. So, call on the index and also, of course, your individual stock calls.
I think viewers have often heard me say that, a trending move closes at the extreme. So, the rupee is going through a trending move, then I think 5 o'clock you will close at the lows of the day. Now, having said that, Bank Nifty is in trouble because if there is inflation concern, then it is sitting on way too large of a rally to sustain that. So I would think that even now this is a good time to get short on Bank Nifty. Today's sustaining of the gap is a sell signal. There should be no question about it. We did not recover even 100 points from the lows. So I think there is more selling coming on Bank Nifty, and I think Nifty will also finally at least head to 11,250 if not lower, but Bank Nifty damage will be significant. Individual stocks, Canara Bank is a sell with a stop of 277, target of 265. BPCL is a sell with a stop of 390, target of 375. And Vinati Organics, that's a buy with a stop of 1300, target of 1365.
Okay, Vinati Organics is one of the buys for Ashwani. By the way, there's a lot of pressure building on PSU banks now. If you see the intraday graphs of PNB, Bank of Baroda, even SBI, Anuj, SBI suddenly down 4%. I mean, this is a big move.
Oh, yes.
Now, I mean, how would you read this? Is this just people immediately trying to take profit off on an SBI trade, whatever was left after the numbers, or suddenly a lot of selling?
This is a straight away money market place, Surabhi. If money market's getting volatile, if inflation is a bit of a factor, and you had a big rally on SBI. Let's not forget that. Yesterday marked, we were discussing on Friday that perhaps Friday marked a culmination of that corporate bank rally that we had.
Yeah.
That I think explains the kind of move that you're seeing. I think Canara Bank is one of Ashwani's calls, but if you see other stocks, obviously there's quite a bit of selling pressure right now as far as the PSU banks are concerned.
Oh, absolutely. Well, let's find out what Prakash is working with. Prakash, you're looking at STBT or BTST or both?
STBT.
Okay.
And STBT, both the weak stocks. I'll go with DCB Bank. That looks weak. Looks like falling down. Looks like it's heading to levels closer to 162 zones. Stop about 167. And I think Dish TV is going all along way down here. The first technical targets that I have is 60 zones. Stop about 66. So Dish TV is down as well.
Okay, but Ashwani, again to go back to the larger trend. I know on Friday you said that you have taken positional short home. Till about 2 or 3 days back, you were talking about buying any and all dips on this market. What about that texture? At what point do you look to buy?
Once this rupee stops falling, and once these inflation concerns are out of the way. See, 2 days back there was no inflation concern. Rupee wasn't falling. This Turkish lira problem had not happened. Now everything becomes overvalued. Rupee is overvalued. Bank Nifty is overvalued. Plus you are sitting on a large rally. So it's basically 2,000 point rally. Market will find a cause to fall 700-800 points on the Bank Nifty. Similarly, 10,250, 10,500, unable to cross 11,500. So market will find some reason to go back towards 11,200, 250. So that way reasons happen later and corrections start first. But at 11,500 there wasn't any follow through.
Okay, well, as we welcome in our Alpha manager, just one question to Deepak before we get the conversation going with the Parag Parikh Mutual Fund. Deepak, you've been talking about this on social media as well. I mean, everybody's been wondering whether this best of this PSU bank rally, corporate bank rally is over or not. I am not going to club ICICI and Axis in this question, but squarely on PSU banks, what would you advise people to do?
So I think there is one more big round. I think SBI has been talking about it. Finally, they said the worst is not exactly over. It's going to happen on September, which is when a lot of the power NPAs are most likely going to come through, at least from a visibility point. There is also some more of the NCLT resolutions. They will know exactly how much of a hit they're going to take. So I think NPAs will go up in the near term. Within public sector banks, I feel there are a few banks that have actually good capital ratios. But other than that, the PNB, the SBIs and the Bank of Baroda's, I think are going to be exposed to at least one more big round, and based on what the AQR says, which is currently ongoing, probably a little more in December as well. So I don't expect them to start picking up credit growth more than 7 to 10% before March or June of next year. So in that context, I would just stay the course, not buy any more right now, buy any of the public sector banks right now, except the ones with good capital buffers.
Okay, Deepak, we let you go on that note. Thanks a lot for taking time out for us. Our alpha manager for the day, Ronak Onkar of Parag Parikh Mutual Fund, is now with us. Ronak, good afternoon. Your NAV just went up 1%, I think, today because of dollar rupee. It's phenomenal the way the money market has behaved today. But your thoughts on the macro picture and this big risk which is now emerging?
Actually, just to qualify what you said earlier about the NAV going up because of dollar rupee, we actually hedge about 80% of the dollar exposure that we have, so that we necessarily avoid.
I said it in lighter vein. Yeah. I said it in lighter vein, Ronak, just to welcome you. But I take your point. My question was that this big, money market weakness and what's happened globally, fresh contagion. All of a sudden, things looked quite good till about 3 or 4 days back. There's a fresh risk on the table.
I think it's interesting because macro events keep happening and keep disturbing the flow of capital here and there. But if you look at businesses and if you're a bottom-up investor, your focus always has to be on what the earnings of a particular business will be and the trend that business is following. And we are in that camp where we look at businesses on a standalone basis to understand how they are growing, at the same time the runway that they have going ahead in the longer run.
Rona, good afternoon.
Definitely macro events will keep perturbing. Yeah.
Okay, sure. So, I know we usually don't talk stocks, but allow me this one question at least. One of your biggest local holdings is, of course, HDFC Bank, and the headlines have not stopped coming since Friday. It is a big departure, but does it change your thought process or thinking whatsoever, or do you think, it's just business as usual at this bank?
I think in one way it is business as usual, where top management can change and move to other places or whatever happens. It's part of the business. At the same time, we should realize that if you are considering this is one of the largest banks in our country, there will be definitely management bandwidth available to make sure that its business is going to run the way it is supposed to be run. I don't think it is too much of an importance to be given to that. Of course, leadership change does affect how the bank will be run, but at the same time, the processes are in place and we are aware of that in the past results of the company.
Okay, of course, over the last few days, there's been a big rally in the likes of Axis and ICICI, Axis in particular, Ronak. You reckon this is now the time to add to these banks, considering the multi-year underperformance that these stocks have shown?
Actually, it's very hard to predict from an investor point of view how the book will evolve over a period of time. In a way, you can see that every quarter most of the results keep coming, saying that the worst is now behind us. But sometimes banks will have to provide and get back to their regular capital cycles in order to get back to the original performance that they were intended to deliver. I think looking at momentum is not something that we do. We are okay in investing about 11% of the fund in 3 banks, and we will see how these banks perform going ahead.
Okay. I also did see a lot of pharma holdings in the fund. There's Dr. Reddy's, there's Lupin, Pfizer, there's also Ipca. Now, it's been all over the place, this result season for pharma companies, very stock specific. Lupin, I mean, there was disappointment that obviously they don't have any big launches for the next couple of months, I guess. So pharma, is it a business call that you're taking, or is this a bit of maybe a currency play that keeps these stocks in your fund?
Actually, if you zoom out quite a bit, if you go back, say, 2 years time frame and compress that and see the results, most of these companies in pharma sector have had very spotty results. One quarter is good, the quarter is bad. The point being, it's becoming very difficult to predict individual companies and how they will perform in the longer run, because most of the product dominance that they had in form of low-hanging fruits of going into different markets and selling products, that has changed quite significantly because pricing pressures have come on many of the products. So where launches have been allowed for other competitors, you'll realize that some of the incumbent players will suffer the price erosion. I think in the light of that, we have realized a basket approach will be a little sound for the way we invest, where some critical factors have to be in place, like management has to be very strong. The business should have experience in selling in various markets across the world. Some product pipeline has to be there in case of growing that business in different markets and domestic market. And at the same time, there has to be some advantage like low cost of manufacturing or some product base on which they can rely on. I think some of these factors coming together, we can build a basket of pharma stocks around that.
Okay, build a basket of pharma stocks. The FANG stocks, Ronak, Facebook corrected, of course, after the numbers, has immediately bounced back. But any sort of risks emerging out of this space?
So the risk is always there. There is a regulatory risk where there is uncertainty in the way how regulators will respond to how these companies should grow and expand their user base. On the other hand, what I find interesting is because of GDPR in the Europe, some of these larger platforms like Facebook, Google and other platforms have become stronger even than before, because the newer players or the marginal or the small size players who are in the same business or data gathering and using it for targeted advertising, they will face a lot of cost pressure in terms of complying to these regulations, whereas the larger companies have the balance sheets to easily comply to that. On the other hand, the existing user base remains sound. Of course, growth will be affected in developed markets where this penetration of these services has already reached the intended population level. Most of the growth will be seen in the rest of the world or Asia or countries like ours, where the market is expanding, more people are coming online. In a way, targeted advertising is the new trend. We can see digital ad spending going up and traditional media suffering a little bit because of that. I think that trend is there in the longer run. We just have to figure out if this is the right valuation to pay for such ideas to be invested in.
So, Ronak, finally, your fact sheet said that you still find mid-cap and small-cap stocks, perhaps richly valued. Are you looking around, and you are holding a lot of cash, I think 26-27% cash in arbitrage. So then what are the new ideas that you're kind of thinking of? I know you won't give us stock names, but at least anything new, any themes that are crossing the mind now in the mid-cap universe specifically?
Actually, to broadly categorize is very difficult, but on the other hand, we keep researching ideas, and the cash that you see, about 26% in the fact sheet, it's a residual cash where some funds have accumulated, some ideas we have sold from the past. We have been marginally adding to the existing holdings that we have in the portfolio, but the moment we see a really interesting idea coming up, a large chunk of the cash will be deployed immediately. So it's a residual amount that you're seeing right now.
Ashes that you are seeing on your screen, they're coming from our colleague Anshu. This is a committee that was formed to take stock of what's happening with the power plants in Gujarat. I mean, I think Tata's Mundra plant, etc., those were also part of the consideration over here. So those are the flashes where procurers, states are saying cap coal prices to begin with. So this is all under deliberation. It's still a work in progress, but that's the story that's on your screen. Right now, let's bring in another market voice into the conversation this Monday afternoon. Monish Babrai, Managing Partner of Babrai Investment Funds, is with us. Thanks, Monish, very much for joining us. Good to have you on the show. Now, we talk on a day when the headlines are all about the Turkish lira. Now, those issues might be ephemeral, perhaps, but do you think that money markets, including the US and India, perhaps have run a lot? Are they getting into overpriced territory?
You know, I definitely find US markets mostly either fully priced or overpriced. So we are not finding much in the US. I think in India, still very much a stock picker's market. And I think when you get past the top 100 names, there's a lot of opportunity. I mean, I think you've got to do your work, but still plenty of great businesses run by great leaders and at pretty decent valuations with good runways and such, but you've got to pick your spots.
Mr. Babrai, good afternoon. Last time you told us you're 85% invested in India and less than 5% in the US. Has it changed?
Yeah, actually, I think what I mentioned is that we are mostly at that time were invested outside the US, not only in India, but a few other geographies. But as I speak to you today, we have nothing in the US, and we probably have more than half the pie in India, and then we've got a little bit in China, a little bit in Europe, and that's kind of how we've. But you know, it's all bottoms up. You know, we don't have a view that I have to have X% in X geography or anything like that. It's just what shows up and what makes sense. So I think for quite a while, we've been finding stuff in India, but we haven't been finding anything pretty much anywhere else in the world. And so I'm just spending more time digging into companies here, and it's great.
Okay, there's clarification coming in from Jet Airways. That's causing maybe, I don't know, shorts perhaps would be covering. I don't know if there'll be fresh buying just because of this. The company is insisting that their account is still standard with banks. It is as part of the watch list, but it's not an NPA. That is what banking sources, SBI sources, are telling us.
It's a stock which is almost dead now. 5%. It's an F&O ban, of course, Surabhi. So obviously, it's become too much of a speculative play right now. I think there was a time when things looked good for Jet Airways. Those times have well and truly gone. And now what you have is stocks at 300, sub 300. You'll have these kind of moves which will perhaps news which will move the stock. But I don't think we'll read too much into this. Frankly.
Okay. Monish, I just wanted to talk about certain individual holdings. I mean, if you can get into details, that would be great. I think Rain Industries is a pick that you had. I believe you also bought into Suntec Realty. Are these still holdings? Do you like real estate? I mean, as a space in India?
Yeah, I mean, if you look at a company like Suntec, for example, when we were first buying our first shares, maybe about 16, 17 months ago, we paid about 1/3 the current price, and so the first quarter of 2017 and the second quarter, the first half of 2017, was, in my opinion, a tremendous time to go into, especially Mumbai real estate, and it's worked out quite well. I think those areas have tailwinds for a while. I think in real estate in general, I separate Mumbai from the rest of India because one of the only geographies in India which is land constraint and wall-to-wall people and a very low quality housing stock. In Mumbai, for example, even if you're affluent, you may not be living in a great flat, unfortunately. And so I think in general, specifically Mumbai, where we are landlocked, we have large amounts of population and very limited areas available for development, those are really good traits for real estate companies. And also the thing is that we had a trifecta with demonetization, GST, and RERA. And so 80–90% of the developers are out of business. And so the survivors, there's a handful of survivors, to them will go the spoils. So I think Pabrai funds, we have a significant exposure in specifically Mumbai real estate, and I'm thrilled about that. I think it is north of 700 crores, and yeah, I think we'll keep that for a long time.
Okay, so what do you want to avoid right now? What's in your don't like list?
Yeah, so I think one of the things about capitalism is that you don't get paid more for degree of difficulty. So what Buffett and Munger mean by that is that there are some businesses, or most businesses actually, that are really tough businesses because capitalism by its very nature is brutal. And there are other businesses where an idiot can run them, and they just gush cash, and you don't get paid more for going into the difficult business. You actually get paid more for owning the easy business. And so it's a dichotomy in capitalism where one of the things I'm really looking for is what is the quality of the business? Is it a great business which can be run by an idiot and still make money? Or is it a business that has so many competitors and so, I'll give you an example. The typical bank. The typical bank is not a great business. They have to lend out 7 or 10 times the capital they have to make 1% on assets. Okay, so the thing is your 2–3% spreads. So your margin of error is really small. And we've seen what the impact of that margin of error is in all the PSU banks. So you can take the entire banking sector and say, a tough business definitely cannot be run by idiots, okay? But like if you look at a company like Coca-Cola, in its 30-year history or something, at least 50 years it was run by idiots, okay? 5 decades. I can name, we had time, we named the CEOs, but they couldn't destroy the business. Not only could they not destroy it, it grew like crazy. With decades of poor management, buying film studios, buying shrimp farms in Thailand, and then selling them all at a loss, all those things put together, Coke has been a great investment. And it's been a great investment because the core business is phenomenal, and it's easy to run. So I think the trick I've learned is don't do math till the 4th decimal to invest. Look for the no-brainers. And that's what the most important thing, more than the checklist, I think, is looking for no-brainers.
Okay, that's an interesting, Mr. Babara. Thanks a lot for joining us. Most decisions have to be kept simple in stock markets and don't complicate, don't get into 4th digits as far as math is concerned. Let's keep things simple then. The Bank Nifty is down 300, the Nifty is down 70, 11,358 is what we have. Ashwani, I think the 20 DMA is somewhere around 11,250 on the Nifty. Do you think that's material, or that won't matter if we have this kind of global move and this kind of currency move?
See, we will halt out there, and since the trend is strong, you'll possibly see some amount of bounce from there. But if it starts to become this sort of a currency move, and you are going to 72, etc., and all sorts of inflation problems come to the fore, then given that you have been rallying since 10,600, 11,000, 11,050 may also be an outside chance. But for the moment, let's keep it at about 11,250.
Okay. By the way, the one stock that's going all over the place is State Bank of India. Just about 10-15 minutes ago, we were talking about a 4.5% decline. It's recovered quite sharply from there. Now it's back. It's down 2.5%, but that's the V-shaped recovery on an SBI. So lots of intense trading action coming in. Mayuresh Joshi of Angel Broking is also with us. Mayuresh, I also want to talk about the day's winners. GAIL is one of them. Lots of positive brokerage commentaries come through post the numbers. Would you advise buying GAIL now?
Afternoon, Surbhi. I think the outlook probably looks very, very positive, and in terms of how the pricing will be specifically for the US-led contracts, that again is a big positive. What happens in terms of the unified tariff policy and pricing, I think that also probably has an upside element in terms of how the price will pan out over the next few months. So if one really has a medium to long-term view, yes, I think the positive view on GAIL continues.
Okay, Mayuresh, hi, good afternoon. What about State Bank of India?
Afternoon, Anuj. I think ever post the numbers, I think there are apprehensions in terms of one soft quarter still continuing for the bank. But a large element in terms of the recognition from their watch list, which has probably come through. And even if you look at the slippages figure, specifically the corporate slippages, I think it was more or less in line with what we were expecting. At the same time, when you're probably looking at how the NIMs have spread out and the retail contribution to the overall advances, I think that is a significant amount of cushioning factor for the stock. Can the stock correct further in terms of the overall market trends? Absolutely yes, but our view probably remains very, very positive in terms of strong growth expected on the advance side, specifically from the retail advances. Even on the corporate book, I think the kind of stress that you probably witnessed in the quarter gone by, my own sense is that 1 or 2 quarters, and I think a large element of the stress should probably be there. Yes, I think the power sector and power assets might have larger amount of provisioning to be done. But again, I think that might well get embedded into the price if it corrects further. So I think a positive view remains on the stock. Any sharp decline, I think, becomes a very good buying opportunity.
Ashwani, your STBT price target on BPCL is almost here. I think your target was 375, if I remember correctly. BPCL has been thrashed down 6%. So, I mean, if someone's not done anything till now, they didn't follow that STBT. I mean, would tomorrow morning, if this is still the state of play, would OMC still be a short trade?
See, it's basically, the reverse of banks. Each time, currency depreciates, these guys get into trouble. So if this is going to become a theme, then they are all going to go lower, including PSU banks, and a lot of this PSU bank rally will get taken away. So just waiting to see whether this theme will sustain, and given the rupee chart, I think it will.
Okay, as we are winding up, what I'm going to do is just look at the European markets to see what immediate signals we have. European markets are holding up better than us. I mean, the DAX is down 0.5%. The CAC is slightly better off. FTSE is also down 0.5%, and Dow futures are still down 95 points. So Anuj, I guess a lot will depend on Western action today.
Oh yes, it will. One of my favorite dialogues and one of my favorite movies from one of my favorite actors. I think I've said that in the past as well. When Kevin Spacey in the movie 21 said, always account for variable change. Look, I mean, till last week, the basic premise was you buy all dips, you make money.
Yeah.
That premise is still okay. I think that, but you'll have to, keep the dollar rupee as a variable.
Yeah.
Is that changing? Till last week, it was stable. 68, 69.
Yeah.
Nobody was prepared for 70 all of a sudden on the screen. So that I think is something to keep an eye on. Today was essentially currency move. Let's just put it like that, because if you take a look at the indices, first that's the Nifty down about 0.5%, 0.6%. Now let's have Bank Nifty, that's down about 1.1%, and let's have Nifty IT. The Nifty Bank, of course, being the largest component of the market. Nifty IT perhaps the second largest, if you exclude Reliance and oil and gas. So 1.4% is what you had on Nifty IT today. And I think that played out in individual stocks as well. If you take a look at individual stocks today, HCL Tech, Infosys, Tech Mahindra, all these stocks were higher quite a bit. In fact, Infosys hitting a fresh all-time high in a market like today. That is what you had at stock level. On the way down, of course, BPCL, HPCL, IOC were the biggest loser. There's a bit of a double double whammy here. In a sense, crude prices are up, and you have dollar-rupee equation also playing like that. So 6% down on BPCL. SBI was all over the place, but down about 3%. Axis down about 1.5%. So obviously there was some selling pressure in the corporate banks. On the other hand, there was some buying in a name like IndusInd Bank, also Larsen and Toubro. But all in all, I'll have to say that a weekday. Having said all of that, the advanced decline is quite. I mean, it's bad, but could have been worse on a day like today, Surabhi. And mid-cap index also actually is just in line, not falling too much today.
Okay, let's just take a look at what's happened with the mid-caps. There are quite a few big casualties. Some of them are result-related. So anyway, I'll quickly run through the list. Sun TV's numbers just were completely ignored by the market, the good numbers that is. For whatever reason, we've seen an 8% decline on that stock. India Cements got thrashed. Of course, they had a couple of earnings issues as well. Cadila Healthcare's numbers, the 100 crore rupee miss on the top line, so 6% gone there. NBCC weak results, 5.5% down. Canara Bank, 5%. Actually, on Canara Bank, let me just talk about the PSU banking universe as a whole, because we have seen a fair amount of weakness. Allahabad Bank, Canara Bank, these are some of the names. Even a PNB, for that matter, 3% lower. IDBI Bank, Syndicate, lots of these names on the downside of the screen. If I talk about what else was weak today, Bajaj Electric, by the way, has lost 8%. Unfortunate developments within the family. That seems to be reflecting on the stock. What else was down? Shriram Transport Finance has lost about 5% today, so can't ignore that. PFC is down about 5% as well. So a lot of big stocks also at the receiving end. Indiabulls Housing Finance, since we're talking financials, NBFCs, that stock was anyway down 3.5%. Dish TV's lost 3.5% as well. IGL is down 3%. REC is down 3%. This is the list of losers. On the upside, Apollo Hospitals came out with numbers. The market seems to be very gung-ho on whatever the management said in the call. 13% up on that stock. United Breweries, again, a positive result reaction, 8% up over there. First Source has recovered some of the losses of last week, 6% up. Smart way to start the week for First Source. Jet Airways, there's a lot of trading play around that stock. The company statement that they are not an NPA with banks, 4% up over there. Corporation Bank bucked the otherwise weak banking trend today. Some buying on Mindtree, Rights, even Hexaware. So IT was a favorite play, not just in the large cap universe, but even in the mid cap side of the market. And finally, maybe Reliance Communication. Again, absolute trading punt over here. Of course, the deal seems to be going through. That's what we know. That's what they've told the exchanges. So these were some of the stocks in focus today. So very, very different shades depending on which stock you were looking at, even in the mid-cap market, Anuj.
Oh yes, so let's see. For now, you'll have to say that it's a weak closing. Let's take final thoughts then from our guests. Prakash, for tomorrow, what are the key levels to watch?
I think the key levels on the Nifty basically seems to be that the high of today should be taken out. If it doesn't get taken out, it's a sign of weakness. And if the low gets taken out, I think we may have come down to maybe around 11,200 zones.
Okay. Ashwani, same question to you for tomorrow. Of course, we will see what the setup is. But, does today's high become a bit of a resistance?
See, more important is that at least on the financials, on these OMCs, you have found a reason to fall. Because, this high-low type trading is there when you have no reason to go up or go down. But this sort of macro move, if tomorrow again a rupee opens beyond, say, 70, then automatically all bets are off and you start to move lower. My sense is this will be a little deeper than 1 or 2 days. So maybe banks still have 500-600 points on the bank Nifty downside, and possibly the Nifty still has probably a couple of 100 points to go on the downside, because we had a vertical rally. Vertical rallies often are the culmination of an upside move. So I wouldn't be surprised if you get very close to 11,000, 11,100. Similarly on the bank Nifty, 27,200, 400, that sort of zone.
I guess all of us will be checking our phones and alerts very carefully till about 5 p.m. There's still an hour and a half of trade left on the currency. And right now there is no sign of a pullback whatsoever. The rupee is still at the day's lowest levels with a decline of 1.5%. Let's see towards the last couple of minutes of trade if something has to happen, whether it's dollar sales by the central bank or exporters coming in with a gush of dollars. Not sure. Let's see. This is a weak picture on the currency. Mayuresh, very quickly, then last question to you. On the currency play, let's say if you were to pick anything fresh in IT or pharma, any 1 or 2 names perhaps?
So, Surabhi, I think within the large cap IT names, HCL Tech is something that we will still continue to prefer, both in terms of the inorganic growth that it has displayed and expectations of a very strong constant currency revenue growth. Within the mid cap names, again, nuclear software is something we'll continue to prefer. More on the premise on the NBFC business actually doing well, a large part of their capex behind them and cash flows actually improving. On the pharma side, again, I think not specifically in terms of how the currency has depreciated. So I think a lot of the players probably do get positively impacted. But I think Ipca Labs, ever since its results, and though I think the contribution from the US markets is very minimal, it's a more domestic play. I think pharma space, one has to be really, really stock specific. Ipca in terms of domestic formulations holding up as their cash cow and the expectations of their global tendering business actually picking up should actually augur well for them. So I think the specific stocks within the IT and pharma space.
Well, oil marketing company stocks came in for some heavy-duty pummeling today. That's thanks to the currency impact. These are big importers. They require dollars to buy crude oil. But that apart, it's been a decent quarter for many of these companies, including IOC. The numbers have been driven by some high inventory gains. Anshu Sharma caught up with Sanjeev Singh, chairman of Indian Oil Corporation, and began by asking him about the guidance for GRMs in the quarters ahead.
Apart from impact of inventories, the GRMs are also affected by the cracks between the product prices and the crude prices, as well as the physical performance of the refineries. Now, if you look at the physical performance of the refineries, all the refineries of Indian Oil had done extremely well in this quarter. And the distillates were higher than the last year first quarter, and this year distillates were 80.3 against 78.6 last year. Similarly, internal fuel and loss was 8.6% this year against 9% last year. So these two parameters, apart from capacity utilization, which was also marginally higher at 102.4 against 101.6% last year. So these parameters confirm that the quarter one this year, all the refineries of Indian Oil did extremely good in physical terms. The marginal lower GRM, if we talk about the net GRM, that is excluding the inventory impact, was marginally lower than the quarter one previous year. This year it was 5.18 against 6.44 last year. Was predominantly because of the lower cracks this year.
Coming to Iran sanction, what is the exposure to IOC, and have you heard anything, any clarity with regards to sanctions imposed by US?
if we talk about Indian oil, we are a large importer of Iran crude. Iran is one of our largest supplier of crude. The public sector companies or Indian refining companies also, on a country basis also, India is a large importer of Iran crude. And we are observing the situation very, very closely. Till date, because the banking channels are still open, we are still continuing to take Iran crude. And proportionately, I can only say that on proportionate basis, whatever is our annual commitment, we have been taking, and we are still taking Iran crude. We are preparing ourselves. We are fully ready in case any cut is happening in the future months beyond the 4th November, which is today the deadline for the sanction to kick in. And Indian Oil is fully prepared to take alternate supplies from alternate sources, and we have assurances, we have options available to take care of any shortfall which might happen because of reduced Iran import.
How is the capital expenditure plan for this financial year, and how much have you already spent in the first quarter?
First quarter we spent nearly 5,500 crores during this year, and against the annual target of over 22,800 crores. So, and this is across different business lines, this is across different divisions, and we are very confident that we will meet our CapEx target for the year.
Okay, that was IOC. Let's move on and should focus to the ongoing 4th India International LDRI Summit in New Delhi. My colleague Nigel D'Souza caught up with Chaudhry Birendra Singh, Minister for Steel, as part of a very special panel and asked him about the outlook for steel consumption in India.
When you have the projection of double-digit consumption of the steel in the times to come, and especially there is a mention of 3 years, then I don't think that any such situation would come where you can think of that something has come down. So that on that plank I am quite sure of that this kind of situation, at least for India is concerned, I don't think that at least for 50 years the consumption factor would be negative one.
Okay, and from the sidelines of the same event, Nigel also spoke with the management of JSW Steel as well as SAIL. Take a look at the conversation.
The next hearing is scheduled in the NCLAT on 17th. So before that, as per my understanding, the directive from NCLAT is COC has to look at the revised financial offers, and they have to evaluate and put it in a sealed cover, their evaluation outcomes, and submit to NCLAT. So we hope by 17th it will be known.
We at SAIL, we are looking at a number of about 50 million tons by 2030. But there is a huge challenge. We have to consolidate what we have already established so far. We are still in the process of ramping up. And as I mentioned a little while before, the problems of movement of raw material and the logistics, we have to address that. So once that is consolidated, we will move ahead to the target, as I said, is 50 million tons.
Let's keep one focus on the crude oil prices also, where we started the Asian markets flat, but we seem to be seeing some buying coming in for that one right now. The NYMEX crude is weak because that is the US rig count has increased, but the Brent clearly 0.2% of a gain is how that one is trading. Vandana Hari of Vanda Insights now joins us on the line to talk more about that. Vandana, hi, thank you for joining us. It's the OPEC monthly report today, and ahead of that, we have seen a lot of data suggestion points from IEA. What is your sense on what really could be expected from this report and the impact on crude?
Good afternoon, Manisha. Always good to be back on your show. The crude markets, as we've seen, it's been a month now since they started dropping off very sharply from Brent close to $78, $79 levels. It's off 10% from that now. My sense is that, well, first of all, crude has taken a very big knock, a shake in confidence from the escalating tariff wars between China and the US. And as of last week, and especially as of Friday, we see growing concerns over the turmoil in Turkey and fears of contagion, which are very well reflected across the equity markets. You see a lot of them have been in the red this morning. So all of that, basically there is no hard evidence, nothing concrete yet to deduce that that is going to lead to a shrinking of oil demand growth. And we can talk about the IEA separately. It is still holding on to its projection of demand growth for 2018. But nonetheless, there is a fear that has gripped the market. And it's very hard typically to reason with fear. You know, it's a kind of sense of foreboding, if you will, that these things are going to get much worse. The trade wars are going to stay with us well into 2019. And as a result, prove to be headwinds for economic growth, which typically translates as, just bad news for oil demand growth as well.
So, Vandana, are we talking demand and supply hardcore numbers here, or are we really giving into sentiment?
Okay, so if it comes to demand, it is sentiment, and that's an excellent question. Thanks for that. When it comes to demand, as I mentioned, it's hard to put your finger. I mean, yes, China is not growing as phenomenally. There was some slowdown in their imports over May and June. India is growing quite strongly. Overall, U.S. growth is pretty robust as well. So really no shocks there as such. But when it comes to supply, I think there's very concrete numbers there, which the market has been increasingly focused upon. I mean, starting from the beginning of July, as news started getting around that Saudi Arabia had not even waited for the end June OPEC, non-OPEC meeting decision. They had actually started pumping more from June itself.
Right.
So that has definitely cast quite a bearish shadow on the market as well.
So what's your sense on the prices for going forward then?
Look, as far as the current environment is concerned, and I really don't see any immediate lifting of the sentiment in terms of the bearishness which is coming into play because of the trade wars. I think crude, I expect it to remain under pressure. It's going to take a very, very brave soul right now to buy and drive prices up. So it's just completely been overtaken by bears, and I think that sort of sentiment, the herd behavior will continue. But as we get closer to the fourth quarter, that's when we need to keep our eye on what happens to Iran crude supplies because of the U.S. sanctions. We could be in for a lot of volatility, a period of lull, deceptive almost, the next several weeks, and followed by volatility and possibly a spike. I don't see how you could remove one or more than 1 million barrels per day of Iranian production.
Without having a price.
And without the spike, exactly.
Absolutely, Vandana. Thank you so much for joining us. Always a pleasure talking to you. So that's the view coming in from Vandana Hari. Near term, some pressure, but longer term, it is going to be volatile, continuing in case of the crude oil prices. But with that, it's a wrap on this edition of Closing Bell.